Hello, and welcome to the inaugural Williams-Mullen Benefits Companion podcast, a podcast that helps employers navigate the complex legal challenges of managing their employee benefit plans. My name is Brydon DeWitt. I'm a partner here at Williams-Mullen in the Employee Benefits section, and I've been practicing employee benefits law since 1995, as hard as that is to believe. I'm joined today by Claire Pollock, a paralegal in our section, and Claire and I have worked together since I was a very young first-year associate back in the mid-90s.
And I've been working in this area for even longer than that, but we're not going to talk about that right now.
We hope that this podcast will be a convenient way for you to stay up to date on important employee benefits topics, and we will present them in small, bite-sized chunks so that you can listen to it on your morning commute and at your convenience. And with that, we'll begin with our first topic. So Claire, today I thought we would talk about the relatively new family and medical leave tax credit that's available to employers who offer paid family and medical leave.
Yes, family medical leave is really a hot button issue right now, and certainly employees are advocating for more robust paid leave policies, and I think employers are listening and enacting better policies for their employees.
Right, and I think and Congress is feeling that pressure too, of the public sentiment for paid family and medical leave. And that's probably the reason we have this legislation that was enacted at the end of 2017 that is really encouraging employers to offer paid family and medical leave and providing at least some tax incentive for them to do it. This legislation, again, was passed at the end of 2017 and provided a tax credit for paid family and medical leave for 2018 and 2019 only. So this tax credit that we're discussing today really would expire at the end of this year unless Congress acts. And I think it's foreseeable that there could be an extension given the public pressure for paid family and medical leave.
I think so too.
And so under this tax credit, an employer that offers paid family and medical leave at the rate of at least 50% of pay for at least 2 weeks for full-time employees or a prorated period for part-time employees can take a credit of beginning at 12.5% of the amount of paid leave paid to the employee. To qualify for this credit, the employer must have a written policy that spells all of this out, that identifies that all employees are eligible for the tax credit for the leave, and that the minimum amount of leave for a full-time employee is 2 weeks, and that sets the rate of paid leave at least 50% of the employee's regular compensation. The employer has to have this in writing, and the credit only applies to periods of leave taken after an employee or after an employer adopts the policy. So that's the date. The latest is the date of adoption. So even if you sign the document on March 1, if you make it effective January 1, you still don't get credit for the period of January 1 to March 1. It's only for leave taken after the policy is adopted.
Is there a notice requirement that goes along with the policy?
Well, yes and no. So the legislation does not require an employer to provide notice that paid leave is available. But if the employer tells one employee, the employer has to tell all employees. So it's not a situation where you have one employee who you really want to give the paid leave to, and you don't want the other employees to know about it because you don't want them to take paid leave. You have to give notice to everyone. So that notice, once you start giving employees notice, you have to provide it in a way that's reasonably designed to reach all employees. So through an email or a poster in the break room or a memo, it has to be reasonably designed to reach all employees and let them know that the paid leave is available. It could be in an employee handbook, for example. And in fact, that's where this written policy could be provided, is in an employee handbook. And that would be a good way to meet the written policy requirement and also make sure that employees have been notified about the leave. So the leave has to be provided to every category of employee, full-time and part-time employees. But the credit only applies to employees who are under a maximum income level. So it's the definition of a highly compensated employee that we use for retirement plan purposes. For 2019, the maximum compensation would be $75,000. So if you give paid leave to an employee who earns more than $75,000 in 2019, you can't take the credit. So this only applies to employees who earn under that amount that you can take the credit. And then that credit is 12.5% for the first 50% of compensation that you provide to employees. So if an employee earns, $1,000 a week and you give the employee $500 a week during paid leave, the credit would be 12.5% of the $500 per week of leave that you're getting. And then that credit is increased by 1/4 percentage point for each percentage point that you provide leave or paid leave in excess of 50% of the regular compensation. So you get more of a credit, 1/4 percentage more of a credit for every percentage above 50% that you provide to the employees.
So I'll do a little math for you too, Brydon, then. So if you're reimbursing at a rate of 75% of your pay during family medical leave, then the tax credit goes up to 18.75%.
That's right. That's right. So this is a relatively new tax credit that's had a very brief window of existence. It's going out of existence at the end of this year unless Congress acts. But I think it's still a possibility for employers, if they act quickly to adopt a policy, to have an opportunity to get at least some tax relief for providing paid family medical leave in the remainder of 2019. And if this tax credit is extended beyond this year, the employer will be ready and have the policies in place to take advantage of the leave credit.
And I would say to not be intimidated by the written policy rule. It is not a burden that is as extensive as, for instance, a qualified plan document requirement or a lot of the other health document requirements. That the written policy shouldn't be an impediment to implementing the
right.
leave before.
And most employers who are already subject to the Family Medical Leave Act already are providing leave that qualifies for the credit, for illness or sickness of a family member or the employee or birth of a child. Those family medical leave reasons are already a part of an employer's policy. All you're doing is adding the paid leave aspect to it and defining who's eligible, which is really everyone, and having that in writing and making sure that the leave that you provide meets the 50% rule, that you're providing leave at least 50% of the rate of compensation that the employee had before the leave, and that you provide at least 2 weeks of leave to full-time employees. And so there's still time this year to get these policies in place and to take advantage of this tax credit in 2019. So that'll wrap up our discussion of the Family and Medical Leave Tax Credit. I'd like to thank Claire for joining me on the Benefits Companion. If you have any questions or suggestions for future episodes, please contact myself. You can also visit our Employee Benefits Practice page at www.williamsmullen.com/employee benefits. There you can find out more about our team as well as past episodes of this podcast and legal alerts. Be sure to subscribe to this podcast to be notified when our next episode posts. Thanks for listening, and until next time.